Welcome to the Deep Dive. This is where we grab a whole stack of sources, articles, research, you name it, and really dig in to find the key insights for you. And today, we're diving into something pretty relatable, I think. Thinking about where to grab a casual meal, maybe somewhere that feels a bit like an escape. I'm talking about Bahama Breeze. You probably know it, right? That place with the whole Caribbean vibe, the tropical drinks.
Yeah, that island feel. They really leaned into that niche.
They did. But here's the twist, and it's a bit unexpected. Despite that unique positioning, Bahama Breeze is, well, hitting some seriously rough seas right now. Its parent company, Darden Restaurants, big name, they've been making some really drastic decisions about its future. Almost existential decisions, you could say.
That's a good way to put it. The signals are pretty strong.
So what's really going on behind the scenes there at Bahama Breeze and, inside Darden itself? And how does this maybe reflect bigger trends shaking up the whole restaurant world? What could it mean for your next dinner out, potentially? That's our mission today. Unpack all of that, pull back the curtain a bit. And joining me, as always, to help connect the dots and give us that wider view is our expert.
Great to be here. And it really is a fascinating case study. It shows how even, a well-known brand inside what looks like a strong company, how quickly things can change in this market. It's not just about one restaurant chain. It's a real peek into corporate strategy. Ruthless sometimes.
Okay, let's get into it. Bahama Breeze, it's been around a while, founded back in '96, right? In Orlando.
That's right, 1996, Orlando, launched by Darden.
The same Darden that owns Olive Garden, Longhorn Steakhouse, the big guys.
Exactly.
And from the start, it was all about that casual, Caribbean-inspired thing, seafood, chicken, steaks, and those cocktails, of course.
Definitely the cocktails. They carved out a specific identity, different from your standard burger place or Italian chain.
Totally. That escapism vibe, island time, right when you walked in.
Trying to give you that mini vacation feel.
But then, boom, May of this year, Darden makes these huge sudden moves.
Yeah, very abrupt.
They just shuttered 15 Bahama Breeze locations. Like overnight, it seems.
15? That's a really significant number for a chain that size.
Yeah. And across the map, too. New York, New Jersey, Nevada, Massachusetts, Michigan, even Florida, its home state.
So not just underperforming markets necessarily, it was widespread.
Right. So if you had one nearby, it might have just vanished. And to put that scale into perspective, back in 2014, they had 43 restaurants. Now, after shutting those 15, they're down to just 28 or 29.
Wow. Okay, so that's more than a third gone.
Yeah, over 30% reduction. Just like that. That's a huge signal, isn't it? When a brand shrinks that fast.
Absolutely. And this is where we get the first real clue about why. These weren't just random closures. They were tied directly to the money, to Bahama Breeze's performance within Darden.
Okay.
Reports point to a pretty significant drop in sales, 7.7% down system-wide for Bahama Breeze in 2024.
7.7%.
Okay.
That sounds like a number that gets attention.
Oh, definitely. For a big public company like Darden, a drop like that in a specific brand, it flags it. It means it's, struggling to connect, struggling to be profitable compared to the others, and it forces their hand. You see these kinds of decisive actions then to protect the overall health of the company.
Yeah.
It just shows that even that fun escapist concept, it isn't immune. The market's tough, costs are high, that mini vacation doesn't automatically equal success anymore. You've got to perform consistently.
Which brings us right to Darden's strategy. And this part is really interesting from the corporate side. Their Q4 earnings call, end of May, the CEO, Rick Cardenas, he didn't mince words.
No, he was very direct.
He said Bahama Breeze is no longer a strategic priority. Ouch.
Yeah,
That's blunt.
and even more telling, it didn't meet the criteria for future investment.
That's basically saying, we're not putting any more money into this.
It really is like a public breakup, isn't it? It sends a clear message to investors, the market,
Right.
the staff, too.
Absolutely. It shows that history and identity, they don't guarantee a future in these big portfolios. It's about the numbers, the strategy.
And it's even more serious than just stopping investment. Cardenas confirmed they're looking at strategic alternatives.
Right. And that's corporate speak for some major potential changes.
Yeah, not just tweaking the menu. These alternatives could be selling the whole brand off to someone else.
Finding a buyer.
Or converting the existing Bahama Breeze spots into Olive Gardens or Longhorns. They're star players.
Leveraging those strong brands and existing real estate makes sense from their perspective.
Or even just folding the whole concept. winding it down completely.
The end of the line, potentially.
And the key thing is, Darden's already stopped investing. No new builds, no major renovations, no big marketing pushes. It's just sitting there.
It's in limbo, waiting for that final decision, like a ship cut adrift, as you said.
So how does this fit into the bigger Darden picture? Because, Darden itself isn't struggling, right?
Not at all. And that's crucial context. This decision about Bahama Breeze, it's being made from a position of strength, not weakness.
Okay.
Darden's overall results are actually really impressive. Q4 total revenue, up 10.6% year over year, hit $3.27 billion.
Wow. Okay. So the parent company's doing great.
Extremely well.
Yeah.
Especially considering, the economy and everything. And look at their main engines. Olive Garden grew same-store sales almost 7%, 6.9%, Longhorn 6.7%.
Those are solid numbers in casual dining right now.
Very solid. And a big part of why they're doing so well is their off-premises game. Takeout, catering, delivery, that revenue stream was up nearly 20%.
So they've adapted really well to how people are eating now.
Exceptionally well. They know how to operate these brands efficiently and capture that demand. Plus, Darden also just boosted its dividend for shareholders and announced a huge $1 billion share buyback program.
Those are signs of a company feeling very confident.
Supremely confident. So, letting Bahama Breeze go or changing its course, it isn't panic. It's discipline.
Right.
It's about optimizing the whole portfolio. Focusing their money, their time, their effort on the brands giving the best returns, the ones driving growth.
Pruning the portfolio, basically. Cutting loose what isn't keeping up.
Exactly. It's a calculated business move to invest more in their winners. Very strategic.
Okay, so Darden's strong, but Bahama Breeze is getting cut back. What does this signal for the wider casual dining world? Is this just a one-off?
No, definitely not a one-off. Bahama Breeze's situation, this downsizing, it really mirrors these broader pressures hitting a lot of mid-sized casual dining chains.
Okay, so it's part of a pattern.
A very clear pattern. These chains are getting squeezed. You've got costs soaring, labor costs, food costs.
Yeah, we hear about that constantly. Minimum wage hikes, ingredient prices.
Exactly. That hits the bottom line hard. Wage inflation is persistent.
Yeah.
Supply chains are still tricky sometimes. Costs are just up across the board. And then there's the customer side. How we eat is changing fast.
Right.
You've got really good, fast casual places, booming quality, but quicker, maybe cheaper than full service.
Like the Paneras or Chipotles of the world.
Sort of, yeah. And then people also want super convenient delivery at home. Or if they do go out for a sit-down meal, they might want something more upscale, A real treat.
Makes sense. The middle ground feels tougher.
It's getting squeezed, yeah. That traditional casual dining space where Bahama Breeze sits, they have to fight harder to give you a reason to choose them over all the other options. Value is key, but so is the experience. It needs to be compelling. And we're seeing this everywhere. Look at the struggles, the closures, the restructuring. Hooters has had issues. Red Lobster's bankruptcy was huge news.
Yeah, Red Lobster was a big one.
PGI Fridays, Applebee's, Denny's, Red Robin. They've all been closing locations, rethinking things.
Wow. So Bahama Breeze is definitely not alone in this.
Not at all. It's part of this larger trend. These established brands are finding it tough to adapt. That unique theme, like Bahama Breeze's Caribbean vibe. It used to be a big draw, but maybe it's not enough on its own anymore, especially when people are watching their spending more carefully. They get selective.
Okay, so this brings up the big question, the one I think people listening might have. What actually happens next for Bahama Breeze? For those 20-something locations still out there, what are the real possibilities? These are actual restaurants, people's jobs.
Right. It's not just abstract. There are basically three main paths forward, as Darden sees it. Path one, maybe the best outcome for the brand itself, a sale.
Okay, someone else buys it.
Yeah. Another restaurant company, maybe private equity looking for a turnaround. If that happens, the new owner would probably invest, renovate, maybe tweak the concept, try to reignite growth.
A second chance, basically.
A second chance. It's tough, but possible. Gives it a shot at survival, maybe even expansion again down the line.
Okay, what's path two?
Path two is conversion. If Darden can't find a buyer or doesn't like the offers, they could just convert those remaining Bahama Breeze buildings into Olive Gardens or Longhorns.
Ah, right. Use the real estate for their winners.
Exactly. From a business standpoint, it's efficient. They know how to run those brands. They're profitable. It maximizes the value of those locations for Darden.
But for the Bahama Breeze fans, their tropical escape becomes, pasta or steak.
Precisely. The brand experience vanishes, replaced by something familiar but different.
And the third path,
The third path is the toughest one. Simple closure.
just shutting them down for good.
Yeah. If there's no buyer and conversion doesn't make sense for every location, Darden might just close the remaining U.S. sites permanently. And for the fans who really loved that specific atmosphere of the food, that would be it. The brand disappears. So unless it finds that new owner willing to invest and adapt it, that whole Bahama Breeze experience could just become a memory.
A stark reminder of how fast things change.
Absolutely. Only time will tell which way it goes.
Okay, so let's recap this deep dive. Bahama Breeze. Its future looks pretty uncertain, really.
Yeah, significantly dimmed.
We've seen this rapid downsizing, Darden openly calling it non-strategic, leaving those last 14 to 28 locations in a precarious spot.
Sale, conversion, or closure seem like the main options on the table.
Meanwhile, Darden's big guns, Olive Garden and Longhorn, they're thriving, growing, which shows how much this is about strategic focus, right?
Definitely. Adaptability and focusing resources where they work best.
It really makes you think, doesn't it? How these big corporate decisions by restaurant groups are constantly reshaping what's familiar to us. Are we going to see more unique niche brands like Bahama Breeze maybe fade away,
Yeah.
replaced by fewer, bigger, more efficient chains?
Or does this create gaps? Opportunities for new, maybe smaller, more innovative concepts to pop up and grab our attention?
Yeah, and how much do our choices, what we want when we eat out, whether it's convenience, value, a unique vibe, how much does that actually drive these huge shifts? It's all connected.
It really is a constantly evolving landscape.
You're listening to The Deep Dive, where food meets business. Stay tuned and stay curious.